A lot of people ask, must I have a credit score? If you want to buy a house and you have the total money to buy the house or a car or whatever thing that you want to buy and you don't want to borrow money from bank, hey, you don't need a credit score. Just pay the money and nobody will ask you about your credit score. But if you want to borrow money to pay for something or you want to pay for something instrumentally through a process they call financing, they must always check your credit score to determine whether you can pay back the loan or not. If you cannot meet the excellent stage, don't go below the very good. The minimum you should have is very good, because that's the point where you start reaping the benefit of credit score. What is a credit score? A credit score is a tool used by lenders to help determine whether you qualify for a particular credit card, loan, auto loan, mortgage, or service. Your credit score is just a number that most financial lenders like banks, building society, or other lending institutions use to determine whether they should offer you a loan or not. Generally speaking, your credit score is based on your credit report. What's your credit report? Your credit report contains your credit history. It's a record of repayment of debts and your financial standing. Simply put, your credit score is just a numerical score that represents your credit history. It's very often for us to see people that say, I bought a house, I bought a car, I bought this, I bought that. A good number of them do not pay the complete amount of money to buy a house or to buy a car. In most cases, they put down a small amount of percentage, 10%, 20% of the total amount of the house. Now, the amount that they put down is called down payment. Let's take an example. You want to buy a house that costs $1 million, but you don't have $1 million to buy the house, but you only have $100,000. The banks will be ready to lend you the remaining $900,000 if they check that your credit score is good. For them to agree to give you a loan, a credit card for your car, for your house, or for any service that you need loan for, they have to be sure that you can pay this money back. And the only guarantee that you can pay this money back is track your history of when you were given loan before. Were you able to pay back? So your credit score is just a number that represents how you borrowed money in the past and how you paid back. From your lender's view, they use your credit score to determine whether to give you a loan or not. They also use it to determine how much they can give you as loan. And finally, they use your credit score to determine the interest rate that they should charge you. Let's look at the range of credit score for FICO. Now, if your score is poor, they may not give you a loan at all. But if they give you, the interest they will charge you will be very high. If it's fair, the interest will reduce compared to when it's poor. Now, if it's good, the interest will reduce. So as you go from poor to excellent, your bank will be willing to give you more money if your score is excellent than if your score is poor. And also, the interest rate that we charge on someone that's excellent is much more lower than the interest rate that they will charge on the person that has a poor credit score. In general, the main benefit you gain in having a credit score is that people with a higher score are often seen as lower risk, which means lenders are more likely to give them credit compared to people that have a lower credit rating. What are the factors that contribute to your credit score? Now, there are 5 major factors that's being considered as shown on the chart. So if these are the factors that affect your credit score, how can we use it to boost our score? If you want to increase your credit score, first of all, I will advise that you know what your present score is. And how do you know your present score currently? Is by going on websites like clearscore.com, creditkarma.co.uk, annualcreditreport.com, Experian.com, Equifax.com, transunion.com. Once you fill in your details like your name and your address, they will give you your credit score instantly and for free. If you want to increase your credit score, you have to get your credit report and validate your information. If the information I have about you is right, like the address I have about you, is it your right address? Your name, is it really your name? And information like that. If you have any issue and there's a mistake, reach out to the company and they will answer you to correct the mistake. The easiest way for you to improve your credit score is by having a credit card and using it. So request for a credit card from your bank or from a credit lender. Capital One is very popular for giving people a credit card no matter how low your credit score is. Now, if your score is too low that they cannot give you any credit card at all, you can open a secure credit card account. It simply means you deposit an amount of money for them to give you a credit card. This happens for people that their score is extremely low. Now that you've gotten a credit card, the rule is use the credit card. Don't get the credit card and put under your pillow and you will not use it for several years, thinking that, oh, if I spend it, my score will reduce. No. But the rule for spending on credit card is to spend often and little. Let's use these factors now to boost our score. The first factor is your payment history, which accounts for 35% of your score. It simply means, do you pay your debt on time? And how often do you pay your debt? So the rule we are using now is to pay on time. Hey, if you spend from your credit card, we are playing smartness on these people. So whatever you spend, you are paying it back as early as possible. So, but if you cannot pay on a daily basis or weekly basis, you can pay now on a monthly basis. Have a direct payment to that account that pays back everything that you spend on a monthly basis so that you will not forget. Remember that what accounts most of your credit score is your payment history. So we want to optimize it by paying our debt on time. Whenever you spend from the credit card, pay back on time. Pay back on time. I cannot stress it enough. Don't just pay the minimum amount. Pay back the full amount you spent. That's the catch that they use to get people that are lazy to pay back the money. If you pay back the money on time, within that month, you will pay no interest. So you are gaining twice. First, your credit score is increasing, and secondly, you will not pay any interest. The next biggest factor that affects your credit score is your utilization rate, which accounts for 30% of your credit score. Utilization rate simply means credit balance to credit limit ratio. Your credit balance is the amount of money you've spent from the maximum limit in your card. Let's say that your card has a maximum credit limit of $200 and you only spend $50 from it. So your utilization rate is simply 50 divided by 200, which is 25%. So your utilization rate is 25%. In order to increase your credit score, we have to maximize this factor of utilization rate. The rule is do not spend more than 25% of your credit limit. Even though you have the right to spend the full amount of money, does not mean you should spend the full amount of money. If you spend the full amount of money, your lender will see you as someone that spend everything. So which means you are not smart in spending money. They give you a loan and you are spending everything just like that. The amount in your credit card most likely is not a very big amount of money. It's like £200, £1,000, £2,000. It's not your main money. It's just like a taste to see how do you handle the small amount of money. You are asking the bank to give you $200,000 to buy a house. They are trying to examine how do you spend the $2,000 on your credit card. How you handle what is small would be likely how you handle what is bigger. So if you want to be financially smart and increase your credit score, spend below 25% of your credit limit. In fact, if you really want to be smart, spend below 5%. And remember, just what I said earlier, whatever you spend, pay it back on time. Now, another factor that influences your credit score is the length of history. It simply measures how long have you had a credit card, or have you opened your first account, your last account. What is the average age of your usual bank account? The general rule is that the longer you've dealt with money, the easier for them to track your money habit. If you have a credit account for a longer years, they will have more history about you. Therefore, believing that you'll be a lesser risk to them. How do we maximize this factor? It's simply by leaving your credit card's account open, even if you don't use them anymore. The account age by itself will help boost your score. If you're not using a credit card, don't just go and shut it down because you're no longer using it. Age of your account is important. Even though your own age does not count in the equation, the age of your credit card account contributes to the score. By keeping it open, your account age will be much longer, thereby helping to boost your score, and also it means that your total credit limit will be much higher, thereby keeping your utilization rate less. The next factor that affects your credit score is type of account, which counts for 10%. There are two types of credits. We have the installment credit and the revolving credit. The installment credit involves paying back a fixed amount of money on a fixed date. The opposite of it is revolving credit, which means the amount you pay back is not fixed. The only thing that is fixed is the minimum amount that you can pay back. A very good example is your credit card, which involves that you can pay back any amount of money that you spent. If you spend $200, you can pay back $200. If you spend $500, you can pay back $500, or pay back the minimum amount, which is usually $10 or $5. The credit agencies are saying that when you have a mixture of installmental credit and revolving credit, it helps them to know how you are able to deal with money in different situations. It gives them more data about you, and therefore it boosts your score. Having a mix of credits account for 10% of your score. So don't feel bad if you have different type of credit. You have a mortgage, you also have your credit card loan. Don't feel bad if you use it effectively, if you're able to pay each of them back. But if you don't have different kind of loan, hey, don't go and take more loans because you want to get 10%. Remember, it only accounts for 10%, which means it's small. And the last, not the least, factor that affects your credit score is new credit, which accounts for 10% of your credit score. Now, new credit simply means you requesting for a new credit. The rule is don't open lots of new accounts all at once or even within a 12-month period, because when you open new accounts over and over again within a 12-month period, each of the new accounts that you're asking for credit will be doing a hard check on your credit account. A hard check on your credit account to get a credit within a short span of time decreases your score, because the lender will think that you are in financial distress. So that's why you are so eager to get a credit, and they don't like giving money to people that are under financial distress. So what then should I do? You can do what they call a soft check, eligibility checker. Almost all financial lenders have an eligibility checker on their website to give you like a percentage of your acceptance. Eligibility checker shows you how likely you are to be accepted for credit before you apply. This means you can avoid applying for products you are unlikely to get, and you won't have to make multiple applications before you are successful. It shows you your financial products alongside your eligibility percentage. You are the only one who can see your soft searches, and they don't affect your score. So you asking for your score does not affect you because it's a soft check. You only do a hard check when it is really, really needed, and that should be once in a while. Your utility bill doesn't really account for your score, but Experian credit agency is offering a boost where they use your utility bills to boost your score. So if you want to get a boost on your credit score instantly, go and register on Experian, which I will attach the link in the description box of this video, and get a boost. And the way they give the boost is by using your paid utility bills. So by following these 7 strategies, I have no doubt that you boost your score once in a while thing. It's a continuous thing. You keep increasing it on a weekly basis, on a monthly basis, on a yearly basis. As always, don't forget to smash the like button, smash the subscribe button, smash the share button. Please share this video. Give other people the opportunity to watch this video and increase their credit score. Thank you for watching this video. Bye.